me first explain that, then we will right. So overhead absorption means charging overheads to the products, or they call it overhead application, whatever. There are two methods. One is traditional method, other one is the activity based costing. In traditional method, what we do, that's what we have studied so far. What do? We have an overhead application rate. How do we find overhead application rate? We take total budgeted overheads, you divide that by total budgeted application basis or allocation basis. This basis is something connected to production. We call it this way, a volume based measure. What's the meaning of volume based measure? A measure that increases with volume. Something like labor hours, machine hours, material consumption, something like that. A volume based measure that reflects the complexity of the product. So this is what we studied now. Like you take all the overheads, divide by labor hours. Example, labor hours, machine hours, materials, etc. What ABC tells, rather than taking all the overheads together like this, we will take them into different categories. See, I'll show you working under ABC, activity based costing. Overhead, we analyze the overheads based on activity. Look at the activities. For example, machine running activity. That means machining. Machine setup. Machine setup means like servicing your car. Once in a 5,000 kilometer, you do servicing your car, right? Similarly, we do for machines also. Once in a while, you have to stop the machine, change the certain components, lubricants. So that's machine setup. Procurement of material, buying material. I'm not talking about the purchase cost, but related to purchase, there are other activities which gives you cost, like some documentation is involved, some traveling might be involved, time of purchasing stuff. So all that is procurement related overheads. Delivery of goods. Likewise, there are many activities which are the reasons for the overheads. Identify such activities. Then take the overheads of each activity. We call them cost pool of each activity. That means regarding machine running, what are the activities, what are the costs we have? Regarding machine setup, you may have to bring a technician, you may have to buy some parts, you may have to stop the production for a while. So all that is the cost pool of this activity. So let's say machine running for a month, I'm talking about month, $10,000. Machine setup, $8,000. Procurement related overheads. This is only for overheads. Remember the heading I have put. Overhead application can be done with traditional or ABC. So procurement related overheads, let's say 5,000. Delivery related overheads, let's say 7,000. Then what we do for each of these activities, we find a different basis, because how machine running has to be charged to the products may be based on machine hours. How machine setup must be charged to the products must be based on number of machine setups, because some machines or some products, they need frequent machine maintenance. So number of setups might be more for that. Some products might be quite light products which do not harm the machine much. There is no wear and tear, so you can run it without machine setup for a long time. Procurement might be based on number of purchase orders. Delivery might be based on number of delivery runs, how many rounds of delivery you are going. So in this month, let's say machine hours, they are planning to work 5,000 machine hours. In this month, let's say they are planning to do 100 times machine setup. Say they are going to do 50 purchase orders, 25 delivery runs. Now divide it and get a rate. Rate is going to be overhead application rate for each activity separately. 10,000 is the overhead of this activity. 5,000 hours per hour 2. 8,000 is the overhead of this activity. 100 times you are doing setup. So per setup it's 80. 5,000 is the procurement related overheads. 50 purchase orders you are going to do. Per order 100. 7,000 is the overhead of delivery. 25 runs divided 28 or 280. So you'll for each act exactly same thing we did earlier. This time what we do, we don't take all the overheads together. We have classified the overheads into different groups. Each group is analyzed differently. What's the benefit of doing this? We can find a more connected basis. For this cost, this basis is more connected, more meaningful. This cost, number of machine hours. When we pool everything together, when you take all the overheads, see if I am going to do traditional method, what is the total overhead here? 10 plus 8 plus 5, 23 plus 7, 30,000. I will take all 30,000 hours here, 30,000 overhead here. And if I use machine hours as the basis, 5,000 machine hours. So somebody might argue, come on, how machine hours is connected to delivery overhead? How machine hours is connected to procurement related overheads? It's not really connected. So compared to the traditional method, this method is more meaningful. After finding the rates like this, one of the products they make, let's say product alpha. Okay, product alpha is going to take 1,000 machine hours. For product alpha, altogether you are doing 10 machine setups. Say 8 procurements. 4 times delivery. So the overhead calculation is going to be for this product. You have got the rate as 2,000 machine hours, 2,000. Got the rate as 8, 10 machine setups, 800. You got the rate as 100, 8, 800. 280 into 4, 120. Then you can find the total overhead for this product. Similarly, for each product you can do this calculation. This is called activity based costing. See the name you can decode it now. Activity based costing. You are doing this. How did we do this pooling of overheads? How did we categorize the overheads? That's based on activity. This is one activity, another activity, another activity, another activity. For each activity we find the overhead, we find a basis. This is called cost driver. Cost driver. You find a basis and then find the rate. Using that rate for each product you apply. Am I clear?
Yes.
Yeah. Activities that cause cost to be incurred are called cost drivers. They are explaining the term cost driver. I already have explained. You can see that. The costs that are associated with each of these activities are allocated to that activity, and the rate per activity is calculated in the same way as the predetermined overhead rate is calculated. ABC allocates indirect and fixed cost to individual products or product lines based on the value added activities that go into each product. These are value added activities, what we saw now: machining, procurement, delivering. These are activities. What is the meaning of value added activities? Each of these activities adds some value to the end customer. When you deliver the good, yes, the customer finds it good. Good is being delivered. Machining, of course, that's the production process. So each of these activity adds value to the customer. ABC provides an appropriate allocation of indirect cost. Appropriate allocation. Can you see appropriate? Because the basis we are using is more meaningful than the basis we use there.
Tradition.
The traditional method, yes. So ABC is most useful when overhead accounts for the majority of manufacturing costs. That means, what does that mean? They say traditionally, if I throw a box like this side for traditional, this side for now, modern. The y-axis is percentage of cost. Percentage of cost of production. So this is 100% of production. If you look at traditional environment, majority of costs were direct costs. You only had a small proportion of cost that was overhead. Why is that? Mostly all labor intensive processes earlier, less machinery, less sophistication. So most of your cost was direct only. Material, labor was the main costs. But now in the modern world, proportion of overheads have increased. There is a lot of administration work, lot of marketing work, lot of other work than production. So if you look at the proportion, I am not telling in terms of dollar value direct cost might be same or sometimes even more, but proportion out of 100% of a product's cost, if you look at the proportion of direct cost has reduced like this. Proportion of overheads have increased. So when you have such significant proportion of overheads, you have to be very careful costing them, right? When the overhead proportion is very small, even if you made mistakes in this overhead analysis, did not affect much. It was okay. But now, if you make mistake with this part, that will have serious effects on, impact on your costing. That's what they say here. ABC is most useful when overhead accounts for majority of manufacturing cost. Majority of manufacturing costs. ABC terms. Activity, I already explained. A cost object is anything for which costs are accumulated for managerial purposes. Cost object. For example, at Alnada, we can say one batch is a cost object. Why? We calculate the cost connected to that separately. A CMA batch is a cost object. A car, if Alnada has a car, that can be a cost object. Why? We find the cost of that car, maintenance cost, running cost, everything we find separately. That's the meaning of cost object. Anything for which costs are accumulated for me. Cost driver, I already explained, that is the basis. That is the one driving the cost. For example, delivery. If you do more and more delivery runs, your delivery cost is going to be high. So, delivery runs is a cost driver. Then we have two types of cost drivers, structural cost drivers and executional cost drivers. Let's see what these two are. Structural cost drivers relate to the actual structure of the company's operations and the complexity of the technologies the company uses. Executional cost drivers relate to the actual process performed. So the examples I took are mostly executional, machine running. So there is machine hours. It's an execution of an activity, right? Delivery running. See, cost of executing activities is determined by the company's effective use of staff. That is executional cost drivers. Structural cost drivers means not particularly doing an activity. Say for example, even in that case, sometimes design activities we can say more structural. It's not just one execution. They might be, or research. Research is more of a structural thing. It's not just one activity we are doing. Okay, but most of the calculations we are going to do are related to executional cost drivers, machine setup, machine purchase, material purchasing, delivering goods, quality inspection. All these are executional cost drivers. Types of activities: value adding and non-value adding activity. Value adding means that activity adds value to the end customer. See, you are making furniture. fixing the parts of the furniture, of course value addition. Painting it, value addition. Polishing it, value addition. Packing it, value addition. What is non-value adding? You have done a mistake and you are reworking on it. You reworking, can you go and tell the customer, look, I had to rework on this product, so I am charging you extra. Is he going to accept that? No, he will ask, you made a mistake, you reworked on it, what is the value to me? So, reworking, moving the material from one location to another location. Let's say your factory is here, your stores is here in another city, you had to transport this. So because of this transportation, your cost is high. You are telling the customer, you know, we had to transport this from factory to stores. He will ask, what is the value to me? So non-value adding activities means, so value adding and non-value adding, it's from the perspective of customer. This activity, the cost incurred for this activity, does it justify? Will the customer value it? That's so what ABC says, or activity based management says, non-value adding activities must be removed. If I do a further analysis on this, activities value adding and non-value adding. These non-value adding activities, again I can divide into two. Can be eliminated, cannot be eliminated. See, reworking you can eliminate. If you don't make mistakes, you can eliminate that. Moving materials from one machine to another, moving materials and components from one machine to another, machine to machine, that you can't avoid. How? There has to be one machine doing some work. Think about juice manufacturer. There might be one machine filling the bottle. Then the bottle has to move to another machine to cap the bottle. Then it has to move to another one to do the labeling. So moving anyway, you can't avoid it. So what's the management plan? This activity eliminate. You have to eliminate it because it can be eliminated. Train your workers to do the work first time itself correctly without making mistakes. This one, what we do, minimize. How do you minimize it? Arrange the machine in an order so that this moving distance is minimized. Have conveyor belts connected to machines so that people do not have to walk. They don't have to waste their time. Automatically it moves. So this is minimized. What is this? Non-value adding activities which cannot be eliminated, minimize. Value adding activities, what do we do? Improve the efficiency. See how efficiently you can do it with less effort, with less input. How we can get the work done is for value adding activities. Now that's what they are explaining here. Non-value adding activities should be either reduced or eliminated. Eliminated if possible. Categories of activities. There are 4 types of activities: unit level, batch level, product sustaining, facility. Unit level means the activity is repeated for each activity. The activity is repeated for each unit. Think about machining. Machining is an activity you are going to do for every unit. Fixing, polishing, painting, sometimes packing. It happens for each unit separately. That's called unit level. Batch level means you do batch by batch. For example, machine setup. You don't do for every unit. You do for every 5,000, 10,000 units. Procurement of materials. You don't buy material for each unit individually. You buy materials for a certain number of units. Delivery of goods. That's collecting a certain number of units and you do the delivery. So that is batch level activities. Quality inspection, you do batch by batch. Product sustaining means for a product only once you are doing it. Maybe obtaining the approval, legal procedures. Once you get it, you can do it forever. That's product sustaining. Only once. Designing the product design, engineering changes. Facility sustaining means it's not really connected to the production, like say general purpose electricity, security, administration related activities, accounting activities, running a cafeteria, running a canteen in your factory. These are not connected to production. These are known as providing additional services, additional facilities for production. So you call it facility sustaining activities. 4 types of activities: unit level, repeated for each unit; batch level, repeated for each batch; product level, only once for a product you are doing, product sustaining activities. And then facilities sustaining means not connected to products, other activities. Advantages, disadvantages, you can read it, not so important. Activity based costing, there are 29 questions. We'll start with some numbers. Yes. Muffins and cheesecakes. The chocolate baker specializes in chocolate baked goods. The firm has long assessed the profitability of a product line by comparing revenues to the cost of goods sold. However, Barry White, the firm's new accountant, wants to use an activity-based costing system that makes into consideration the cost of delivery person. Listed below are activity and cost information relating to 2 of chocolate baker's major products, muffins and cheesecakes. Revenue, cost of goods sold, delivery activity. So what they are saying, usually we take revenue, we subtract cost of goods sold, we find the gross profit. So based on gross profit, we decide which is more profitable. But now what the accountant wants to do, from the gross profit, he wants to subtract the delivery cost also, because he thinks delivery cost is specific. Maybe some item has more delivery cost, he believes. So he wants to use activity based costing and subtract the delivery cost also, and then find. See here, wants to use an ABC system that takes into consideration cost of the delivery person also. Right. So using activity based costing, which one of the following statement is correct? So it's about which is more profitable, which is less profitable. Shall we see? Okay. So gross profit, I can take muffins and cheesecakes. 53 minus 26, 27,000. Gross profit 27,000. This one 46 minus 21, 25,000. Now let's see what we can do with this. Number of deliveries 150. Average length per delivery 10 minutes. Cost per hour of delivery 20. So can I do this? 20 per hour. Divide by 60, cost per minute. Multiply by 10 minutes. That will give you the delivery cost of one delivery. 20 per hour. I divide by 60 to get per minute. Multiply by 10 minutes, because each is 10 minutes, right? So 10. This is one delivery. How many deliveries like that? 150 deliveries. Check whether I'm right. That's $50. Only $50?
500.
Is it 500?
500.
Okay, $500. Other one, 20 by 60, 15 minutes, 85 deliveries.
420.
420.
425.
425. Let's subtract that also and find the profitability. 27 minus 500, 26,500. 25,000 minus 425, 24,575. So muffins are still profitable. How much more profitability? How much is the difference? $1,925 profitable extra. Do we have an answer like that? Muffins are 1,925 more profitable. Clear? Activity-based costing is increasingly more feasible because technological advances that allow managers to obtain better and more timely information at relatively low cost. For this reason, a manufacturer is considering using barcode identification for recording information on parts used by the manufacturer. A reason to use barcodes rather than other means of identification is to ensure
movement of all parts is recorded.
easily, quickly recorded. All parts are recorded.
All parts.
But if you do manual recording, you are not going to record it.
We are.
Okay, I'll go with your answer. Last one.
I am.
Movement of parts is easily and quickly recorded because, see, very simple example. Think about a supermarket. Think about a time when they did not have barcode machine and all. When they are selling every item, they have to write in a bill book. I don't know whether you have experience of buying from shops where they don't have barcode. Back in our country, still there are some shops. So you order for few things, then one by one they write a bill, they write a chit, and they give you that. They will have a carbon copy. How much of time they take for that? So usually what they do, they have 2-3 counters. Like there will be one person taking the goods, another person most probably he will be wearing a specs also, sitting and writing all the items, and then he gives you a copy of that. So compared to that, when they have barcode, it's so fast. So the movement of components, movement of goods can be easily and quickly recorded. That's the benefit. When using activity-based costing techniques, which one of the following departmental activities would be expected to use machine hours as a cost driver? What do you think?
Material handling.
Machine hours, right? So something that is something that is driven by machines. So robotics meaning plant, cafeteria. Basically, there is no basis for that because products are not connected to the cafeteria at all. Material handling, number of purchase orders or number of different types of materials. Okay. Machine setup, number of setups. The cost driver for engineering cost is the number of production orders per product line. Using ABC, engineering cost per unit of product B. Only engineering cost they are asking. Can you see engineering cost is 300,000. And what's the driver for that? Number of production orders. Number of production orders. Here, 12 production orders per line. That must be for this product. 18 for this one. So altogether how many? 12 plus 18? 30. 30. 300,000 divided by 30. 10,000 per order, isn't it? Then they are asking for which product? Product B. Wait, I'll do it. If I do everything by heart, it will be hard. Okay. So these two together 30. So the rate is going to be 300,000 divided by 30, which is 10,000 per order. Now product B, 10,000 per order. How many orders for that? 18 orders. 18 orders. But they ask per unit. Look at the requirement. Requirement is cost per unit of product B. Product B, how many units are there? 12,000 units are there. This is for all 12,000 units, right? So if they ask per unit, divide by 12,000. 15 per unit. Check if you are okay. This I will let you do. First read this paragraph, see if there is anything, otherwise I don't have to copy that. Felder Products Company manufactures two types of engineering diagnostic equipment used in construction. The two products are based upon different technologies, X-ray and ultrasound, but are manufactured in the same factory. Felder has computed the manufacturing cost of X-ray and ultrasound products by adding together materials, labor, and overhead cost applied based on a number of direct labor hours. The factory has 3 overhead departments that support the single production line that makes both products. Budgeted overhead spending for the department is as follows. What's the requirement? Using ABC, they are asking budgeted cost to manufacture one ultrasound machine. Okay. Engineering design cost $6,000. What could be the base for that? Number of engineering changes, isn't it? 2 plus 1, altogether 3. And then I'm going to multiply that for ultrasound. Ultrasound, how many changes for ultrasound? 1. So that's going to be 2,000. Next one, 5,000 material handling. Regarding material handling, what do we have? Number of parts used. Number of material parts used, 400 plus 600, 1,000 multiply by 600. So that's 3,000 for ultrasound. Next one, 3,000 setup. Number of production setup, product setup, 8 plus 7, 15. 7 setup for this. So that's 1,400. Altogether you are getting $5,000, $6,400. Question is per unit. One ultrasound machine. So this is for 100 units. Divide by 100. 64. Do we have 64? We don't have. Wait, this is only overhead. This is only overhead. Where is material, labor? Because total cost. So material 8,000 divided by 100 will be 80. Labor hours given 300 hours for all 100 units, right? So 3 hours. What is the labor rate? Did he give the labor rate?
Labor cost is given.
Here labor cost is given. Yes, you are right. 12,000 for 100 units divided. 12,000 divided by 100, 120. 120. Overhead you get from here, 64. So altogether 264. Material 8,000 divided by 100, 80. Labor 12,000 divided by 100, 120. Overhead 64. So 264 is the right answer. A company is considering the implementation of ABC and management program. The company would normally gain added insights into causes of cost. The cost drivers, we are getting more details, right? If it is traditional costing, we don't get that much of detail. In ABC, you are getting so much of more information, which managers will be able to understand, okay, what factors are causing the costs. So point A. Try this one.
Can you show the options? 100,000.
Correct. Using ABC, engineering cost assigned to product as engineering cost 250,000, engineering hours 25,000, 10 plus 15, 25. So 250 divided by 25,000 is 10 per hour. Product S 10,000. So 10 into 10,000, 100,000. Theory questions you can even read and understand. Right, one last one. Can you answer this also? Shall I?
I got C, but I got C actually.
You got C?
Mm.
Oh, no. Let's see. Okay. New Rage Cosmetics has used a traditional cost accounting system to apply quality control cost uniformly to all products at a rate of 14.5% of labor cost. Monthly labor cost for satin sheen makeup is 27,500. In an attempt to distribute quality control cost more equitably, New Rage is considering ABC. The monthly quality control cost assigned to satin. Monthly quality control cost. Where is the quality control cost? So all of them are quality control, is it? Yes. Okay. This one cost rate 11.5 per type. Quantity of satin sheet 12 types. So it's going to be 11.5 into 12. 138. This is 0.14 per unit, 17,500 units. Help me with the answer, please.
245.
245.
0.
Okay. This one
1925.
1925. How much is the total?
4513.
4513. The monthly quality control cost. Okay. If they use the traditional method, how much would be the answer? Because questions are higher than that one, lower than that one. That is also the answer, right? So let's find traditional method. What they do, 14.5% of labor cost. How much is the labor cost? 27,500. So in the traditional method, 27,500 into 14.5%. How much is that?
3987.5.
3987.5. Right. Compare and tell me how much extra here.
525.
525.5 extra. Yeah. Option B. 525.5 higher than the cost using traditional system. Right, remaining questions I'll leave it to you. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 questions I have done out of 29. So you have another 19 questions for you. Variable and absorption costing. Two different costing methods. Let me give my explanation, then we will go to what the book says. Variable and absorption costing. Two different costing methods. What is the meaning of costing? You do the production. When production gets over, you give raw material input, you do the production. When production is over, at this point we do the costing. That means finding the cost of each product. Costing has to be done here. So when we do the costing of products, variable costing has different guidelines, absorption costing has different guidelines. It is not a question about what is right. In some circumstances, variable costing is more useful. In some circumstances, absorption costing is more useful. Let's see how variable costing and absorption costing differ. So, variable costing, absorption costing. The costs that you would have incurred up to now, direct material, direct labor, variable manufacturing overhead, fixed manufacturing overhead. See, only the manufacturing process is over. So, non-manufacturing overheads like selling cost, distribution cost are not part of the discussion. We never include them in the product costs. When we say product cost, from the beginning I am telling, it's material, labor and production overhead or manufacturing overheads. That manufacturing overhead I have taken into two: variable manufacturing overhead and fixed manufacturing overhead. What variable costing says, include these items, don't include fixed manufacturing overhead when you are finding cost per unit. Absorption costing says no, include all of them. This is the main difference in valuing the products, in costing the products. Fixed manufacturing overhead is not included in variable costing. It is included in absorption costing. So look at this statement. Say selling price $20. Variable cost per unit, or let's say that material labor, material $3. Labor $4. Variable manufacturing overhead $2. Fixed manufacturing overhead $10,000. Production 4,000 units. Sale 3,000 units. If you are preparing variable cost profit statement, revenue 4,000 units, 3,000 units you have sold into $20, $60,000 will be your revenue. Cost of sales, cost of goods sold, you will include material, labor, variable manufacturing overhead. You will not include this. So in cost of goods sold, 3 plus 4 plus 2, that's going to be 9. 3,000 units are sold. 3,000 into 9, 27,000. So basically this is variable cost of sales, right? Variable. You get 33,000. Then what you do, fixed manufacturing overhead, you just take it as a separate line item, 10,000. See, in terms of units, you have not included that. Units costing was done with $9 itself. What is this 9? 3, 4, 2. Fixed manufacturing overhead goes like a period cost, like research expense, like administration expense, like selling and distribution expense. Some cost that is unrelated to the units, you show 10,000. You will get 23,000 as your profit, operating income. Same thing if you are going to do in absorption costing. Just a minute. Okay, in absorption costing, revenue, okay, 3,000 into 20, 60,000. Then cost of goods sold for 3,000 units, you will take 3, 4 and 2, $9, and you are going to take this fixed manufacturing overhead also. How will you take fixed manufacturing overhead? Based on the absorption basis, right? So here let me simplify and assume overhead application rate. I am assuming $10,000 for 4,000 units. You manufacture 4,000, right? 10,000 divided by 4,000. I assume the application rate as 2.5 per unit. So based on that, fixed manufacturing overhead is also included here. 3,000 into 9 plus 2.5. How much is that? 34,500. So your gross profit is going to be 55,500. And there is no other expense. We are taking everything. Am I right? 55,500. Can you check this answer whether I am right? 927 plus 75, 34,500. Yes. Not 55,500. Sorry. 25,500. So that is going to be the profit in this case. Here 23,000, here 25,500. See the difference? Anyway, we are going to do more questions, but see, mainly focus on cost of goods sold. Cost of goods sold, here I took only variable production cost. Here I have taken both. So what did I do with fixed manufacturing overhead in this statement? I took it separately, not within cost of goods sold. Here it is included altogether. And can you see profits are different? MC and AC, I mean variable costing and absorption costing, profits can be different. Profits can be different. Now the next question. How will the inventory be valued? Inventory valuation. There are 1,000 units of inventory, right? Because you manufactured 4,000, but you have sold only 3,000. 1,000 units of inventory is there. In variable costing, that inventory will be 1,000 at $9. You will call the value, you will record the value of inventory as $9,000. But in absorption costing, what is the value of one unit? 9 plus 2.5, 11.5. 1,000 into 11.5, 11,500 will be the value of inventory. Clear? So it's all about how the products are costed. It's different. Accordingly, profit also will be different. Now coming to another important part, we can do a reconciliation of profits. You start with variable costing profit. Variable costing profit in my example now, 23,000. 23,000. Then increase in finished goods stock multiplied by fixed manufacturing overhead per unit. Or you can say standard, expected. Increase in stock. 4,000 manufactured, 3,000 sold. 4,000 manufactured, 3,000 sold. So 1,000 units has gone to the inventory. Inventory should have increased by 1,000 units. This one was 2.5. Remember fixed manufacturing overhead absorption rate, I found it here. 2.5. Yeah. 2.5. Multiply 1,000 units is the change in stock, increase in stock. Suppose if it's decrease, you put minus. Decrease will be minus. Increase is plus. 2.5. 2,500. Add them, you get 25,500. This will be the absorption costing profit. This is very important, can be tested. There are four items. Can you see? VC profit, AC profit, change in stock, and this OAR. So they might give any three of it and ask for the fourth one. They can give both profits, they can give you the stock details and ask you to find this. Or they can give you VC profit, stock details, and this, ask you to find AC profit. So this can be tested in the exam. Once again, see, I explain the fundamental difference, variable costing, absorption costing difference. Then I showed you how the profit statements are going to differ. Main difference is in cost of goods sold. In variable costing, cost of goods sold doesn't include fixed manufacturing cost, But it takes fixed manufacturing cost as a separate cost, separate item which is not connected to units. We take it separately. Whereas in absorption costing, that fixed manufacturing overhead is also included within the cost of sales. Right. Then valuation of inventory. For variable costing, only based on variable production cost. Absorption costing based on full production cost, including fixed manufacturing overhead also. Then both profits can be reconciled using a format like this. Let's practice this more with some questions. Because when we do more and more questions only, you will become familiar with this. Theory questions and calculations. Let's do calculations first, then we will read the slide and then we will do the theory. Maybe that I will have to take next class. We will practice calculations now. The operating income for Weisman for the prior year using absorption costing system. Okay. Company produced 1000 units, sold 900. No beginning working. Okay. Actual fixed costs were equal. Okay. So revenue 900 multiplied by 100. 90,000. Then cost of goods sold 900 multiplied by 30, 20, 10 and 5. This is absorption costing, right? You take all of them. 30 plus 20, 50, 60, 65. How much is that? 58, 500. So gross profit 31,500. Then you take the other items like all the selling cost, administration cost, everything. So if you look at selling cost, they have fixed selling cost of 3,600, variable selling cost of 12 per unit. 12 into 900. So that's 10,800. 13, 14, 400. Fixed administration cost 1800. Subtracted, you must guess the profit. You must get the operating income. 14, 15, 16, 200. 15, 300. Do we have an answer? 15, 300. See once again, revenue, cost of goods sold, take all the production cost, material, labor, variable manufacturing cost and fixed manufacturing cost, both. These items you take after the gross profit, after the gross non-production cost, will be after the gross profit, selling cost, administration cost and all that. During the month of May, Robinson Corporation sold 1000 units. The cost per unit for May was as follows. May's income using absorption costing was 9,500. The income for May, if variable costing had been used, would have been 9125. So this is about the reconciliation. Look here, variable costing profit 9125. Absorption costing profit 9,500. So you know what comes in between. Increase in stock multiplied by fixed manufacturing overhead per unit. Fixed manufacturing overhead per unit is 1.5. I need to find this only. Either you put it in X and solve it. If not, till this first 9,500, 9125, this is going to be 375. So if this is X, X into 1.5 is 375. Divide by 1.5, X is 250. What is X? Increase in stock. X is increase in stock. Question is production. They sold 1000, right? If they sold 1000, they should have produced 1250. Why? Then only after selling 1000 units, 250 will go to the stock and increase the stock by 250. They sold 1000. Stock also increased by 250. So production must be 1250. Yeah. That's so long. You read it. Come on. Operating income under variable costing. Variable costing, another name for that, direct costing. Variable costing or direct costing. See, if it is variable costing, I would tell you the easiest option for you. Take selling price, product sales $10 each. Take all the variable cost one by one. Manufacturing cost 5.5. Selling and administration cost 0.5. That's all. 5.5 and 0.5, $6. Get the contribution margin per unit, $4. Units sold. Units sold 1,000. 4,000. Subtract all the fixed costs, whether it is manufacturing, non-manufacturing, don't worry, subtract all of them. Fixed manufacturing cost 1,200. Fixed selling and distribution 1,000. 2,200. What is the answer? 1,800. You don't necessarily have to go to their cost of sales, gross profit format. Even if you did that, you will get the same answer. But direct costing, this is much easier. Selling price, variable cost, contribution margin of 1 unit. Multiply by number of units, you get total contribution margin. Subtract all the fixed cost. All on the actual basis. All on the actual basis. If they have given budgeted, don't use it. All on the actual basis. Using absorption costing, inventories costs. Inventories costs. So absorption costing means, this is for how many units they have done. They have not given how many units. Is it material used? Inventoryable cost. Okay. Inventoryable cost means material, labor, variable manufacturing overhead, fixed manufacturing overhead, all of them. Remember I said valuation. What do we include in valuation? In absorption costing? All of them. So material 300,000, labor 100,000, variable overhead 50, fixed overhead 80. Add all of them. 300 plus 100, 400, 450, 80, 530. 530. Assuming no beginning inventory, what is the cost of goods sold under variable costing? Now cost of goods sold specifically they are asking, so we have to find that. Cost of goods sold, how are you going to find? How many units they sold? Company has sales of 75,000 units. 75,000 multiplied by material, labor, variable manufacturing overhead. Material per unit, 150. This is for production, 100,000 units. 150, 100,000, 1.5. Labor, where's labor? Labor 187, 100,000, 1.875. Variable manufacturing overhead 100,000, 100,000, 1. Don't forget these costs must be divided by production because these are production costs. But when you say cost of goods sold, Then multiply that by number of units sold. So finding cost per unit based on production. Cost of goods sold is for the number of units sold. And you know how much you are getting? 2.5, 3.5, 4.375 into 75,000.
328, 125.
328, 125. Right. All these questions we did now, we didn't have opening stock, closing stock. Suppose if opening stock, closing stock is there, cost of goods sold you have to calculate like this.
Finished goods.
Opening stock plus production minus closing stock. Find the units multiplied by cost per unit. Units, cost per unit. Units, cost per unit. This cost per unit, last period's one. You know why? Opening stock means from where it is coming. From last period it's coming. So if last period has had a different cost, they won't complicate that much. But in case if you get a question with opening stock and all, and if they say last month there was a different material cost, this month is a different material cost, then only opening stock you take units multiplied by cost per unit based on last period. Production and closing stock based on this period, current period. Am I clear? I'll show you. If you get questions, I'll show you, but wanted to mention it. But if they say cost had been same last month and this month, or if they say there is no opening stock, closing stock, or no opening stock, then straight away do this. Find the number of units, multiply by cost of 1 unit. Repeat, if they say no change in cost structure, then you don't have to do this. You can do this. This is okay. Or if they say there was no opening stock, then also you can do this. Assuming company uses variable costing, what is the operating income for the prior year was? We did the same thing with absorption costing earlier. Now they are asking variable costing. Selling price, you know, selling price 100, variable cost 30, 20, 10, 12. These are the variable items. 30 plus 20, 50, 60, 72. 28 is the contribution margin per unit. Number of units sold 900. Multiply here 900. Multiply 0, 0, 2, 25. Fixed cost. See, fixed manufacturing cost 5 per unit. Based on how many units they give this 5? Based on 1000 units. Because it's manufacturing cost. So that's 5000. Fixed selling cost 3600. Fixed administration cost 1800. When you add all of them, 10400. Subtract it, you get 14800. Profit, operating income 14,800. Mill Corporation had the following unit cost for the recently concluded calendar year, which are same as its unit cost for the year previous to the recently concluded year. See, there is a same cost previous year also. Okay. Manufacturing, non-manufacturing. Inventory for mills sold product totaled 6,000 units on January 1st and 5,200 units on December 31st. First in, first out. When compared to variable costing income, absorption costing income will be. This is going to be on that reconciliation format. Let's see. How do we start the reconciliation? Because question is about comparison between the profits. Variable costing profit, absorption costing profit. How do we do? VC profit plus increase in stock multiplied by fixed manufacturing overhead per unit At this answer, you get absorption costing profit. Look at the stock details. 6,000 at the beginning, 5,200 at the end. 6,000, 5,200, it's minus 800. Stock details have gone down. Stock levels have gone down. 6,000 has gone down to 5,200. Minus. Fixed manufacturing overhead, fixed manufacturing cost, $3. Minus 2,400. Minus 800 into 3. So if you had X here, it's going to be X minus 2,400. So when compared to variable costing income, compared to this, absorption costing is 2,400 lower. 2,400 lower. Is that clear? One more and we'll finish it. Oh, that's so long. I'm tired to read this. You read. There are so many questions on the data. Okay, we'll try this. This is short. Sometimes the data could be a lot, but the requirement can be very easy. Read it and see. Some questions look smaller, but the working could be higher. Osawa Incorporation planned and actually manufactured 200,000 units of a single product in its first year of operations. Variable manufacturing cost were 30. Planned and actual fixed manufacturing cost was 600. And administrative cost total 400,000. Okay, absorption costing is what they are asking. Okay. Selling price 40, right? So revenue 200,000 units into 40. 8 million. Then variable manufacturing cost 30. Fixed manufacturing cost planned 600. So what would be the fixed manufacturing overhead per unit? 600 divided by 200. 3. 600 divided by 200, 3. Planned and actually manufactured. Yes, 3. So cost of goods sold must be. No. They have not sold 200,000 units. They have sold only 120,000 units, right? So your revenue is going to be different. 120,000 units. Selling price 40. 4.8 million. Cost of goods sold 120 multiplied by 33. Hope you understand how I got 33. 30 is this. 3 comes from here. Fixed manufacturing cost. You might be confused. The overhead should I divide by manufactured units or sold units? Manufactured units. Because it's manufacturing cost. You get 3. So 33 into this. 3.96 million. So you get gross profit 840,000. Administrative cost 400,000. Subtract that 400 also. 440. Oh. Yeah. So that's the kind of calculations you are getting. So one is preparing the absorption costing profit statement and finding the profit. Preparing variable costing statement and finding the profit. Or reconciliation. Using reconciliation answering some of the questions. Clear?